Well, the market is on sale, which means you can buy stocks right now at a really good price. Here are the 10 stocks to invest in, and stay towards the end of the video because I'm also going to throw in a bonus stock that you may not know about. All right, let's get into it. Okay, so in no particular order, the first one we're going to talk about is Google. It's down 35% from its all-time high, 20% from its recent daily high. Look, it's a name you will all know, leader in search, brilliantly run business, and despite being one of the largest companies in the world, it still has a strong outlook heading into next year with forecast earnings per share growth of 15%. Okay, the second one is Microsoft, 32% down from all-time highs, 19% from its recent daily highs, giving us a great entry point, especially with a strategy like our VCA one. Look, this tech giant is showing no signs of slowing down with consistent year-on-year growth in revenue and earnings per share forecast for next year at 4.8%. Now, I know that doesn't sound very big for a big company like that, though it is, and 18% the year after that. There's also plans to increase dividends going forward, and it currently pays a 1% dividend yield. Not that good, but still. The third one is PayPal, a massive 72% down from its highs. It's seen by many as a leading payment provider and has been making moves into the crypto space as well. But minus 74% from its highs, that is quite something. And with a strong outlook for earnings per share growth next year of 21%, it looks like a great potential for our VCA opportunity. It's one that I hold, and I'm looking to add to my position. Okay, number 4 is Square, which now isn't called Square anymore, it's called Block. It's a massive 81% from its highs. It's a very innovative payment provider, making big moves into the crypto space. That's why it's called Block for blockchain. Could be a great alternative for people to invest in this space that believe that this one has more growth potential to PayPal. So don't do both. Just do one of them. Do your own research as always. Number 5 is Netflix, minus 68% from its highs. It's the largest streaming service in the world currently, and yes, it has seen a slowdown in subscriber growth in recent times, but plans to introduce ads and new tiers expectations are to see continued growth in revenue and earnings. I'm watching The Crown at the moment on Netflix and I'm loving it. Number 6 is Disney, also a position that I'm in. Minus 51% from its all-time high, 22% from a recent high. Huge company that is bouncing back after COVID with the reopening of parks around the world and production of new films and TV series, and its Disney Plus is growing at a rapid pace. Could be people's preference as an investment into the streaming space instead of Netflix. Again, which one do you prefer? Number 7, you will know it and love it, Amazon. 38% down from all-time highs, 21% from recent daily highs. Wow, Amazon. Largest online retailer in the world. I'm sure you use it or have used it. And it's been investing huge amounts into business infrastructure to produce strong future growth. Now, despite its size, revenues have still been growing at a strong rate of 28% compounded annual growth rate since 2016. That is some going. Or would you prefer number 8, which is Alibaba, down 70% from all-time highs, has had huge growth since 2016 with a CAGR of 40%, has a strong outlook, but people may not want to have exposure to China, so you might prefer Amazon. What about you? Do you prefer Amazon or Alibaba? Not both. Make sure you diversify. Next one, Eli Lilly. Am I saying that right? Potential breakout entry forming on the daily trade with a trend. Have a look at that. This is, of course, healthcare. Now, healthcare is a defensive sector that typically holds up well during economic downturns. They have a strong pipeline and forecast is for a 17% earnings per share growth in 2023. What's there not to like? All right, but now the last one, and again, this is not in any order at all, but we have Monster Beverage. Okay, 12% from its highs, so really not fallen that much. Looking strong, could be the first VCA entry soon if it goes down to minus 20%. So it needs to fall a little bit. But this beverage industry is another that typically holds up well during an economic downturn. Now, the ticker MNST, has a strong track record of consistent earning growth year on year prior to COVID. So the outlook for next year is strong with forecasts of 29% earnings per share growth. That's amazing, amazing, amazing. Okay, and I couldn't resist to give you one more bonus, and that is First Majestic Silver Corp, and the ticker's AG. Now, on a macro level, all signs point to silver demand increasing throughout the decade. Silver is a key component used in solar panels, multiple components for next generation vehicles. So effectively, the green energy push should create a sustained boom for the silver mining industry. Now, on a company-specific basis, with the acquisition of 2 new mines, First Majestic looks to be on track to generate almost twice the silver equivalent output this year as it did back in 2017, so double. I could give you another bonus one, but let's just put it this way. If you don't like the idea of a silver miner, then consider Barrick Gold as a gold miner. That's also a really good, fundamentally strong company, but always do your own research. So, gave you 2 bonuses there, but you decide which one so that you have some exposure to commodities and also precious metals. Okay? So I hope that helped. So, those were 10 companies that we believe to be strong and on a short list to do more research on. So make sure that you do your own research and use this video as a springboard and see which one that you like. In fact, I gave you some choices between Amazon and Alibaba, for example, and for example, Netflix, and maybe you're looking at another streaming service. So why not comment below? Which ones do you prefer? Do you agree? Do you disagree? And more importantly, are there any that we're missing? These are all big companies. These aren't like new ones that are just about to spurt. These are big, solid companies. So I'm wondering what you're thinking. Please let us know below.